as I mentioned. If we're going to have that global bear market and recession, then we would expect to see labor market deterioration, which brings me on to my next component of this base case hypothesis, which is that we would continue to see labor market deterioration. And this, of course, is following a whole heap of revisions to the downside, including one that was the largest cut in history. And all of this, of course, at a time where we can see a bunch of these companies laying off employees at rates not seen since the GFC. When we pull up the unemployment rate for the US, we can certainly see this thing is trending and has been trending towards deterioration for a very long time. Okay, and again, I point at this every week and say this looks a lot to me like this is a lead-in before an accelerative sweep that we see synonymous with all prior periods of recessions, which you can now see shaded on the chart. One piece of jobs data or recession indicator that people could point at and say, well, this doesn't really look recessionary for a while, was the SAM recession rule. Okay, this thing actually started to look like it had the makings of rolling over here. And in July, it actually made a low of 0.1, which broke the structure, made a new lower low, and allowed us to point at this and say, this potentially looks like the first sign of let up, like we might actually be able to swerve a recession here. However, since then, in two prints, it has more than doubled to 0.23. But for all we know, this has spiked above the prior high, and thus it is actually signaling that a recession is right around the corner.